Okay.
Hey everyone, Ryan here, local mortgage expert, answering more of your questions along with those questions on Quora. Love the opportunity to work with you if you're ever looking for a home loan in the Utah or Nevada area. But let's just jump into some questions that I found here on Quora. The first one I thought was pretty interesting is which FICO scoring model do lenders like Wells Fargo and Quicken Loans use for their home mortgage underwriting? In many cases, we pull all three of the credit bureaus, so TransUnion, Equifax, and Experian, and we use whatever credit score is in the middle of those three. That is a standard industry guideline, regardless of which lender you're using. Now, there is a guideline where you can use two of the three scores, but then you use the lower of the two scores. So we pull all three, take the middle, or pull two and take the lower. Now, if there's two borrowers on the file, so you've got a husband and a wife, or maybe a brother and a brother, we take the lower of the middle of the three credit scores. So if you have your credit score, say it's a 700, but then your co-borrower or co-signer is a 640, we use the lower of the two. So there's a little bit of a formula there. So hopefully that answers that question. Let's see what else we got on here. Let's scroll up to a couple here I saw was pretty good. When is the right age to buy a home? 18. That's the right age. There really isn't a right age as far as I'm concerned. Whatever makes sense for your budget, whatever makes sense for your income. I think buying a home is way better than renting a home, but it really just depends on where you're at your age. Just one right age. I mean, I've seen people that are very mature and ready to buy at 18, others that aren't ready to buy a home till they're 45. So I don't think there's really a right age, but legally you have to be at least 18 to be able to sign the contract. So that's probably the minimum age, but I don't think there's really a wrong or right age. It just depends on where you're at. Everybody's situation is a little different with their education, if they're going to school, the job that they have, their down payment, if they're tied to a particular area, or if they're going to be relocating. So I don't think there's just a right age. I think it's different for everyone. Let's see, what else do we got here? Let's see. Can you avoid paying a real estate agent's commission when selling your own home? So you can sell your home for sale by owner, but I have found many times most of the calls you're going to get as a for sale by owner is from other agents trying to list your home. So you're going to get a bunch of calls for that. You're going to have to deal with showings and contract negotiation, a lot of different things, where most of the time it's just better to hire an agent. And I would say in my experience as well, when you don't have an agent, you typically see people offer a lot less on the home than if you were to get an agent and deal with those things. But I would say really the important thing is to hire the right agent. There's so many of them get paid the same commission regardless if they've been in the business for a year or 10 years. So really screen the agent you're working with. But I really think they're worth their weight in gold. I really do. I've seen this industry for a long period of time. The money that they save you, the hassle they save you, the expertise, the marketing, the photos, the staging, pre-screening, all those things I think are well worth what they're doing. And I think most of the time you're going to get a better price using an agent than you are for sell by owner anyway. Now, obviously, different markets can change. Right now, it's a little bit more of a seller's market, so it's a little easier just to put a sign up and get ready to go. But the short answer is yes, you can. You don't have to use an agent. I just recommend them. I think they're well worth the money. All right, let's see if we can find something else on here. If you have any questions, please comment. We'll get to those and we'll add those to our upcoming videos. If you have any questions or run across anything that does that, let's go back to the credit as well. One of the best ways to boost your credit score is how you manage your revolving accounts. I get this question a lot. And if your credit cards only report once a month typically, there are some that report twice a month, but most of the time they're only reporting once a month. So how you manage your limit and your balance will give you a better boost to your credit score than almost anything else. So one quick tip about credit is keep your keep your balance under 30% of its limit at the time that they report your credit. So whatever's on your statement is typically what they've reported to the credit bureaus. So usually that's around the 10th to the 15th, 25th, somewhere around there. So you'll have to check your billing cycles, but generally that's when they report. Now, if you pay down that credit card that very second, they don't know about it again until the next month. And if you slowly used it back up, waiting for your next statement, they never see that you've paid it down. So the trick is to kind of pay it a little bit early before the statements come out, but not have the balance be zero. So somewhere between owing a little bit on it to under 30% will actually help your credit more than maxing it off, paying it off, maxing it and paying it off, depending on those billing cycles. So that's one trick when it comes to helping with your credit score. And I would say this as well. I'm amazed at how many people don't want to get pre-approved for a mortgage because one of the things they don't want to do is pull their credit. They're so worried about pulling their credit because it does slightly ding your credit every time that you pull it. But it is something where pulling it early can help you get the loan. We're talking about a huge loan here in most cases. Why not pull the credit, see where you're at, and if you need to make adjustments to it, we have a little bit of time to do that. I've seen so many times where something pops up that people don't realize, or their score is a little low that we can work on fixing the credit a little bit, or work on that balance to limit ratio and make a huge difference on the interest rate they're getting. But having an extra month or two to work on it while you're out trying to find a home is way better than waiting to the last second to pull your credit. Now, I understand the apprehension to pull it and dinging it and all that type of stuff. But really, if you haven't been pulling your credit like crazy, one inquiry is not going to hurt you. Even two or three is not going to hurt you that much. But knowing what's on there and making sure you're ready can save you way more than waiting to the last second. So when you're starting the process, pull your credit. Get with your lender, get with me, whoever you're going to use for your home loan, get it pulled right away. Let's see where you're at. Let's check that ratio. Let's see where we're at to get you pre-approved instead of waiting too long. But I'm amazed at how many people will say, I don't want to pull my credit yet. I don't want to pull my credit yet. Pull it. Pull the darn thing so you know where you're at. Don't wait on something like that when it can be an easy thing that can trip you up down the road, or an easy thing you can get better loans with by knowing where your credit's at. Let's see what else we got on here. We'll click a little update here, see if there's anything new that's popped up. And I've started answering other questions, so I'm getting filled with other questions on here. Let's see, what is the best fixed rate mortgage loan? So really, it's the best one for you. There's benefits and disadvantages to a 15-year term, a 30-year term, a 40-year term. There's benefits and disadvantages with each one of those. I think having cash flow is crucial, and having the extra money to put in savings or pay off other debts. So I don't really see a lot of my clients that want to do a bigger mortgage payment to pay it off. What I would recommend doing is getting the mortgage payment as comfortable and as low as possible and get rid of all the other debt. So once that debt is gone, then you can roll it to accelerate the mortgage loan. There's just most other debt's going to be a higher interest rate. Most of it, an extra $100 goes a lot further than an extra $100 on a mortgage. So get rid of everything else and really build your savings up. I think it's crucial that people start to get their paycheck, get their money, and get it out of their accounts into savings accounts first. Too many times people go right from their account, right to bills or right to spending it. When if you get in a better habit of taking your money in and putting in savings first, investments, Robinhood accounts, Fidelity accounts, wherever you've got the money that can go, that is a better plan when you first get the money than waiting until all the other things are taken care of. But when it comes to a mortgage, what is the best fixed rate? It really just comes down to where your cash flow is, where else the money can go that can get you a better rate of return, a little more security, that type of thing. But an extra $100 on a mortgage is great. Don't get me wrong. Rounding it up biweekly, all those things are great. But that extra money goes a lot further on higher interest rate loans that have smaller balances. Get rid of those and then take that full payment you were paying on another debt and then start plunking it on the mortgage. Then you'll really start seeing some acceleration. Let's see what else we got. Let's see. Why is renovating recommended to old homes? So that's a pretty broad question, but it is something where renovating it will bring it back up to a marketable standard. Renovation usually helps with its efficiency. I would say that's one of the biggest areas where you can improve the livability, the marketability of the home is on energy efficiency improvements, whether that be windows and things of that nature. Solar panels can be pretty popular depending on the cost of your energy in your area, but there's some maintenance that's involved in there, so you want to be educated on how solar panels work. But a lot of the renovations will help it be more marketable, more livable, and more energy efficient. Those are the areas I'd put the money into. A lot of times people do crazy customizations that don't necessarily help their value. So you do want to look at things that aren't overly trendy or something that's going to make it harder to sell by having just tons of different colors or different carpets or different floorings or things like that. And obviously you want it to be yours. You want to customize it the way you want to use it. But I do see people go a little too far with some of the trends when it always seems to kind of correct back to what's a little bit more normal. One other big renovation or big add-on I see that can either really help or hurt your value can be pools. They can be very expensive. In fact, a lot of renovations, you could spend 50 grand on a renovation. That doesn't mean the home is worth $50,000 more. That just means you brought it more up to a marketable standard and just made it more livable. So be aware of that, that not all renovations just automatically make your home worth as much as you're putting into it. Generally, you're not going to get dollar for dollar for a few years after the renovation, because all you're doing is bringing it up to the standard of the homes around you and just kind of catching it up to the value and just making it more livable. So I think those are some of the recommendations there. Let's see what else we got. Let's see. Do appraisal companies overvalue specific homes depending on who's selling it? No, they're not supposed to. That doesn't mean they don't, but it is something where they're governed by USPAP, is the governing bodies that regulate what appraisers and how they put reports together, how far away the homes are, the square footage, the adjustments that can be made, those types of things. Plus, lenders want to see certain criteria as well that they want to see on these appraisal reports. But no, the appraiser really shouldn't be undervaluing or overvaluing just based on who's selling the property. It should be based on the location, the square footage, the condition, those types of things. Okay, here's another really good question here. Is 28 years old too old to be a first-time home buyer? So what is a first-time home buyer as far as a lender is concerned? When you hear first time, you think of maybe first kiss or first time I've ever done anything, or first time ever. There's only one first time, right? Well, first time home buyers are anybody that has not owned a home in the last 3 years or 36 months. So even if you've owned 10 homes in your lifetime, but haven't owned one for the last 3 years, either because of divorce or bankruptcy or loss of job or medical or any of those particular reasons, you are now reclassified as a first-time home buyer. So it's not based on being 28 years old or 19 years old or any kind of age. It's based on the last time you've owned a home. So it's a little bit misleading, I guess, to say first-time home buyer, but that's really what we call them and what's always called. So I've had many clients that have owned a home when they were younger and now they haven't for a while. And they said, well, I've owned a home in the past. And I always ask them, when was the last time you owned a home? And it could be 3, 5, 10, 15 years ago. And I tell them, well, guess what? If you haven't owned a home in the last 36 months, 3 years, you are actually a first-time home buyer. Now, why is this significant? Well, there is certain programs that are government backed. There's certain programs that loosen up some guidelines or change some guidelines based on being a first-time home buyer. That doesn't mean it's the best loans out there. It just gives more access to people that have not owned a home in that time frame. So it just opens up the door to a couple different options. But I've seen people that are first-time home buyers that don't use the first-time home buyer programs, and vice versa, where people would have benefited from a first-time home buyer program but didn't quite qualify for it. So that's part of my job, is to find out what programs you qualify for and which one will work best for you. So that answers that question as far as what is a first-time home buyer? Somebody who has not owned a home in the last 3 years. Let's see, when is the optimal time to buy a home? There's a saying in real estate I often use all the time, that the best time to buy a home was 6 months ago. The next best time is right now. And it's very, very, very true. Now, obviously the market's changing a lot. We saw it go just absolutely nuts over the last few years. And it's starting to slow, which is what we want. We just don't want it to explode or burst. We want it to naturally, in the market, to kind of correct itself and slow down a little bit. And that's really what we're seeing right now. So the optimal time to buy is when it works for you, when your qualifications are going to be different than what happens in the marketplace. Interest rates are going to fluctuate all the time. The availability of homes is going to change all the time. So if you find one that fits your needs and fits your location and fits your budget and all that kind of stuff, that's when the right time to buy is. And so it's anytime, all the time. Buy homes. Real estate is still always going to be a great investment. Your cost to buy the money is going to be cheaper than almost any other type of debt. I'm a big believer in real estate. Own a bunch of real estate myself. I have a bunch of rental properties. I'm a big fan and big believer in real estate. So the best time to buy, right now. Let's see. Do realtors like first-time home buyers? It depends, just like anything else. I mean, it depends on the person more than anything else. I mean, first-time home buyers are great. Again, depending on what you call a first-time home buyer. I mean, there's first-time home buyers that are older, first-time home buyers that are younger. But I would say the biggest thing to work on if you are a first-time home buyer is ask questions. You're not supposed to know how all this stuff works, and get pre-approved. Pick the right agent, pick the right team, pick the right mortgage company. That'll save you a lot of hassle. But you're not supposed to know how this stuff works. I don't care if you go in 4 and 5 and 6 homes, regulations change, products change, guidelines change. Get with the right team and ask questions. Don't feel hesitant that you're supposed to know all this stuff. So, do realtors like first-time home buyers? Sure, I think they all do. We do. I like first-time home buyers just as much as anybody else because I like what I do for a living. I like helping people. I like helping people buy homes. But I see a lot of times people don't want to ask questions because they're supposed to know how it works. No, that's what we're here for. That's what your agent's here for, is to walk you through all this stuff, is to put all the pieces together. So ask questions, feel confident, and there isn't a stupid question. There really isn't a stupid question. The stupidest question is not asking them. Just ask. I mean, that's part of what we do. It's part of the fun part of what we do. Let's go down the list here. Let's see. I'll find a couple other questions. Maybe we'll wrap it up. Looks like we're going not too bad on time so far. Hopefully this is helpful for everyone. Let's jump into a different category maybe. This looks like a lot of first-time homebuyer questions here. Let's go homes and homes on Quora. Let's see how many people are asking questions there. All right, first one. Can you be gifted money to buy a home? Yes. The funds need to be sourced and verified. So it can't just be a bunch of cash typically, but if it's in an account somewhere verified, that's been in the account for 60 days, absolutely. You can be gifted the money for a down payment on a home or for the entire house for that matter. But yes, you can be gifted money to buy a home. Can I buy a home making $20 an hour? Absolutely. Now, maybe what you qualify for may be tougher in the marketplace depending on where you live, but really a lot of it comes down to what other debts that you have, not just mortgage. Typically, we use 45% of your gross monthly income. It's a little bit different if you're self-employed, but that's a general rule. So we take your income, divide it by 45% to see what your total bills can be. We add up everything else that's on your credit, and that's what's left over can go towards a mortgage loan. Now, I've seen debt ratios that go above or below that 45% number, but that's a general rule. So can you buy a house making 20 bucks an hour? Sure. It depends on what homes are available in that price range and what other debts that you have. So a lot of times I've helped my clients say, okay, instead of putting a bunch more money down, why don't we get rid of some of the other debts? That way you're able to qualify for a little bit more homes. So looking at the whole picture can help you qualify for different loans or get clever on how to get you into the market with the availability of homes in your market, that type of thing. So can you? Yes, it might be harder if you're making 15 or 20 or $25 an hour, depending on where you live, but it's very doable. It's very, very doable depending on your other debts. That usually affects people more than anything because people will have a $500 car payment that eats up a lot of their income that if that were gone, refinanced, or cheaper or paid off instead of a down payment, that would free up a lot of money on a mortgage loan. So looking at all the debts will make a big difference on income. Let's go with one more here. How can a mortgage pre-approval help you in purchasing a home? That's a great question. It really is your first step. A pre-approval will allow you to know how much home to qualify for, what your payment range is, and what homes to be even looking at. I can't tell you how many times I've had people go out and start looking at homes that aren't pre-approved and either get their hopes way up or undercut what they can actually do. So knowing what the rates are, knowing what you qualify for, knowing what goes into a mortgage, getting some paperwork started as far as pay stubs, W-2, insurance quotes, I mean, a bunch of things like that can also speed up the process so you can make your contract shorter, make your offer stand out a little bit more. So pre-approval is an incredible tool to help buyers get the best price, know what they're shopping for, make sure they've got some ducks in a row, so to speak, before they actually start the home buying process. So I hope this video was helpful. We're going to try to post these a lot more often. If you have questions, comments, things that come up, please post them in the comments. We'll get to those and add them to upcoming videos. Might try to do some live videos, that kind of thing. Love for you to click and subscribe just so we can get these videos out more to more people. I've also started a podcast. We're going to start launching those episodes shortly. We call it the Clear to Close podcast. So those will be launching here pretty quickly, and we'll be talking about other topics going along. So appreciate your time. Love to interact with you and hope you have a wonderful day.